You are hosting, coming up April 11th, Citi's first ever Diamond Day. I'm curious, what's the goal?
I'm excited about it. It's going to be the first time we're bringing executives from Tiffany, Zale's, Dominion Diamond together, and we'd love to have you too. It's here in New York.
Thank you.
Even though diamonds are her second best friend
Are there
behind
giveaways?
There will be small ones.
Oh. What is the diamond market like right now for these retailers?
It is exciting. I mean, we do have a cautious mixed economy here. However, the long-term trends look good. 80% of U.S. brides-to-be wear diamonds, and the second time it's about 60%, and in China only about 30%. So the story there is increasing demand globally.
And presumably, and this really has become the story of China, isn't it? It's no longer an infrastructure build-out story in China. It's an emerging middle class story. So as you have more people, this emerging middle class, in theory, you have more people who can buy diamonds. Is that the logic in a nutshell?
It is. It's definitely true, and it's an increasing important market. It's number 2 to U.S. The market's about 160 billion. U.S. is 60. China's about 30 billion.
What about margins? What kind of margins do diamonds offer a sale of an engagement ring, say, for Tiffany's versus more traditional link silver bracelets, what they're selling more commonly?
Well, the silver bracelets actually do have a higher margin than diamonds because, as you know, everybody looks for a good deal on the diamonds, and therefore, it's a relatively competitive market with engagement. But Tiffany has great margins. It's in the 20s. You think about the apparel sector at large, that's closer to 12%. So luxury is a very attractive margin story nonetheless.
I would think also that it's better for them these days because you see the impact of the payroll tax hike on the consumer. That affects more of the silver products, more of the mainstream products. But then the luxury buyers with the higher incomes are more insulated.
That's true. And you know, the people who have accounts related to the S&P 500, they're doing pretty well. But you do have that. And also, you get married and you do need a ring no matter what, so there's a certain amount of inelasticity.
You don't need a diamond
that's
ring.
That's what I've been told. You know, I haven't gotten there yet, but I'm hearing I'm going to have to eventually go that route. Something. I'm just, you know, it's what I hear. Hey, names. We talk about Tiffany, Signet Jewelers, Zale's. These are other retailers that are producing rings en masse. What's your view? Is this a way to play it?
Yeah, I do like Signet over the longer term. We currently have a neutral rating on that stock. But what's great about Signet, it's the #1 market share leader. They own Kay's and Jared, and they can run huge hundreds of $1 million marketing programs, which are great. They also have a lot of differentiated brands. The other stock is Zale's, and Zale's is doing a good job offering products such as the Vera Wang collection, as well as a colored diamond collection. Colored diamonds are a nice trend and an opportunity.
Those are really expensive.
They
There's
can be.
a tip, Adam. You want to please your fiance to be colored diamonds, right?
I think so.
I don't have a
buy
fiance to be. I'm just saying hypothetically,
yes,
one day.
J-Lo and Adam's fiance. But our gemstones are a little more popular these days, aren't they?
Yeah, I think, you know, there's a lot of opportunities, and we're seeing fashion intersect with jewelry, so you can buy one every season, and that's great for the business. Tonight we do have Dominion Diamond reporting, and I'm expecting good numbers there. It's one of the only pure play ways to buy a publicly traded diamond company.
And it's a Canadian company with an ADR here in the U.S.
Yes. And I would say globally, it takes 10 years to find a mine and to mine it. There's very few mines coming online, about 3 to 4% growth rates versus 10% growth in demand.
And, you know, if you've ever traveled, you know, we're talking diamonds, so we'll sort of make the jump and talk about wine, champagne, et cetera. You know, you remember in the year 2000, they said, oh, buy your champagne now because the world might run out. You go into cellars and you realize over in the Champagne region of France, they've got miles of bottles. Is it like that in the diamond business? They make us think that this thing is really rare, but in fact, they're stockpiled somewhere?
Well, at this point in time, there is a lot of scarcity because the stockpiles have been worked through at De Beers. So I really believe that this is a great story. It's probably a 2014 story with more and more scarcity, but that's luxury goods, and the limitation is a nice factor, as well as the marketing and the romance of the special sparkles and the 4 Cs.
The 4 Cs.
Yes, the 4 Cs.
We'll have a tutorial on that.
Learn about those one day.